Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management e-News. So we sit here on the first day of December, headed into the end of 2025. The Federal Reserve has their last interest rate decision next week, and it's most likely going to cut the Fed funds rate by 25 basis points. That's what the market's expecting anyways. And most of that is priced into the market, meaning the rally we've seen in the stock market here in the last week and a half is coming on the heels of a bunch of Fed governors coming out and saying that they were probably willing to cut at their next meeting, meaning next week. So the Fed's back on the, we care more about the labor market than inflation routine, and so it's going to be interesting to see. They don't have a ton of data. Remember, the government was shut down for 43 days, so they don't have a ton of data on the U.S. economy to go on to make this interest rate decision, but most likely they're going to cut. 25 basis points isn't going to make a big deal either way, but the market really is expecting the cut. So if we didn't get a cut, I think stocks would sell off, but most likely we will get that Fed interest rate decision where they lower rates. Short of that, we don't have a lot of market moving information. The market is really focused on the Fed. The next market moving data we're going to get is earnings season. We're going to get that in the beginning of 2026 in January, and we'll see how companies did at the end of 2025. The third quarter earnings season was great, and so we'll see how fourth quarter earnings season, but those are the two things that we're looking at because that's what the market's looking at. The good news is the market is broadening out from those 7 names to more names in the market and asset allocation working again.
Yeah, I mean, this is a day that we see another sort of repeat of maybe that yen carry trade sell-off. Some might remember we had a little bit of that back in August, but the gist of it is that yields, long-dated bond yields in other countries, whether it's Europe or Japan, are all going up, which is one of the reasons we're more sanguine, optimistic about our asset allocation than when we've been in a long time. Of course, when interest rates are higher and we're cutting higher abroad and we're cutting interest rates here domestically, which looks to be the case, the dollar is probably going to continue to weaken. That bodes really positively for international stocks, mid caps, small cap value. All of these asset classes are actually positive on the trailing 1 month, where the S&P's traded negatively, but we're very optimistic about our asset allocation going forward. Also, if you're concerned maybe about that AI-related trade and some of the concentration in technology, international and these other asset classes aren't so heavily laden in technology names, which gives us a really good framework, I think, to approach 2026 constructively.
All right, as always, if you have questions about your account or your situation, give us a call at the office, 800-743-0988, or email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here at the end of the year.